Well, there's much anticipation of the US Federal Reserve decision this week, and it didn't disappoint. The bounce in the Aussie dollar following the Fed's decision was its largest move of the week by far. Indeed, within 12 hours, the Aussie dollar rallied from under 76 cents to almost 78.5 cents. Its 2.1% rise on Thursday was its largest move since June 2013. And yet by Friday, the Aussie was back down to the mid-76s. So was the US Federal Reserve policy decision a big deal or not? Most of the market attention was on the Fed's updated quarterly forecast, where they lowered their growth forecasts, inflation, and also projections on interest rates. Now, since these hadn't been updated since December, a lot of this should have been anticipated in the market, particularly inflation, where the steep fall in oil prices has cut inflation forecasts around the world. So too, weak data from the US outside the labour market so far in Q1, some of it impacted by harsh winter weather, should have meant that markets were braced for lower GDP forecasts, at least for 2015. The scale of the market's reaction suggests that they were braced for the Fed to signal a rate hike as soon as June. This is still actually a possibility. The Fed really hasn't ruled anything out at this point, except for a steady hand being very likely in April. Westpac's base case remains that September is the most likely time for a rate hike. And market pricing at the moment is for one rate hike before year end. So we're happy with our view at this point. This still means that US interest rates are likely to rise later this year, but just not perhaps at the dramatic pace the market had been expecting. Meanwhile, in Australia, another RBA rate cut still looks very likely over the next couple of months. Pricing for an April cut did flicker above 50% during the week, but it's back down to about 40% now. It's certainly a close call, but at the very least, a rate cut seems assured by May. This will continue to chip away at the Aussie dollar, as will commodity prices, which continue to fail to form a base. We are still seeing new lows on the iron ore price. So it's still overall a fairly negative environment for the Aussie, just not as dramatically as previously. In the week ahead, with a fairly quiet domestic calendar, we would expect the Aussie to trade roughly a 75.5 to 77.5 range. Multi-week, we still target 75 cents on the Aussie dollar.